Welcome to TradeTheNBI.com. This is John. This reports for the 27th of March. Well, all we had to do is look at the DOC. Green had still been leading cyan here, and red still rising. So when we looked at the NBI readings and we saw magenta still leading yellow, we suggested that the bulls actually had an advantage here. So when the selling started, we reached the 23%. Buying came through, but we also knew too that the S&P was not the leader in the situation, that the Nasdaq really was the main focus because it's approaching its relative highs to this year, and as doing so, had much stronger readings, and the NBI white failing completely on that. Interestingly enough, though, that as it created this, conversion there with the cyan moving above green, suggesting a little bit of weakness. So any fade here of shakeout, and we would expect the Nasdaq to start to pull back towards this mean range here, and that certainly would be more difficult for the S&P to hold within that level. So that's an important distinction, and that's kind of what we're looking at. Flight to Treasury is still very strong, and that's lowering yield with the expectation that the Fed is going to continue to soften. But I think the Fed may do just the opposite. That it may continue to be on its tightening pace, as well as still provide liquidity within the banking, which is kind of a dual role, but certainly less cash flows in the way they're doing this. And that certainly isn't as stimulus as some people might think. It's just about shoring up people's faith in the credit of banking and that. So I think it's a little bit different than some of the reads that I've been hearing about, where everyone thinks the Fed has just given in. Real question becomes oil in this particular case, and whether or not it continues to fade. And we're still seeing softness in that oil sector here. So the longer that goes, the easier it gets to turn things around economically. And well, it's got more to go, but it's certainly better than it was. It's not going to stop gold's run because, again, inflation is still running, and um, with the deficits and everything else that have to be accounted for, there just isn't going to be any change in that. Euro backing off just fractionally from where it was, but still way elevated than it needs to, with this idea that the ECB somehow is going to be stronger when it comes to inflation and catch up. And it just isn't the case, because there's just not a whole lot of room for the ECB to tighten things up anymore, because uh, what are you going to grind the Eurozone into nothingness? The US, at least from an economic standpoint, is holding on. Uh, Unemployment and everything else until that cascades. Fed isn't going to change course on that. That's also going to keep strengthening your Bitcoin and ETH as well. And they're just going to move back and forth based on what they see with the market and supply. So people are going to take their gains. I don't see any of that being abnormal. And of course, this continual trade station issues back and forth with that. Nothing I can do. So that's the long and the short of it for now. I think that we just have to keep an eye on the intraday charts there. The 50K in particular is going to signal a stronger move towards the downside, but ES still has to cross that critical threshold, and any weakness that we start to see on the Nasdaq is really going to exacerbate itself on the S&P. So those are the two areas to be watching, because if the Nasdaq doesn't maintain the lead, then I think it all starts to get fairly ugly. As always, though, I will update you on the Skype chat, anything relevant, and preparing indicators for April. So trade well. We'll talk to you later.